Hello all, this is David Rodriguez, quantitative strategist for dailyfx.com, here to talk about market conditions and the trade setups I'm watching in the week ahead, and let's get right into it. So, if you follow along with me regularly, you know all about the volatility prices and the volatility indices I'm constantly talking about. So I'll start with that. First things first, we'll see that the DailyFX volatility indices, the 1 week index, has fallen to its lowest levels on the year, which is substantial. That means, and DailyFX volatility indices measure real volatility prices paid and received by FX options traders, some of the most sophisticated traders in the world, on these options contracts. So when you see the 1 week measure drop to its lowest on the year, basically means that everyone's expecting the slowest price action all year, which is saying a lot because October was dead quiet until the very end, and we've seen a lot of really other quiet weeks of price action. So, ultimately what does that mean? Well, it means that we're probably not going to see big moves, obviously. But more than that, what we've seen and what I talk about in today's report is that, I'll admit this right from the start. Last week I talked about our range trading strategy being, in a great position to do well. In fact, it hasn't really entered trades because that system basically only is able to enter positions if and only if sentiment is not at extremes. But what we're seeing today is, or what we're seeing recently is that despite the fact that volatility remains extremely low, the dollar and the Japanese yen continue to hit fresh lows. So let me bring you to dailyfx.com and specifically dailyfx plus. So I'm going to jump on dailyfx plus right here to the speculative sentiment index page. If you have a login, you can obviously join me right here. If you don't, sign up for one. It's a great resource. So SSI. What SSI is showing us is that traders, are in my headline this morning I said remain mostly long the Japanese yen, which is definitely true. They likewise remain very long the US dollar. So what that range 2 strategy does is basically, take range trades if and only if the sentiment ratio is not at extremes. And what we're seeing is that across almost everything, traders remain heavily long the US dollar and heavily long the Japanese yen, which is keeping range 2 out of trades. What is doing well right now is momentum 2, which has been our favorite strategy for a long time now, up until last week when I started second guessing it because volatility had just fallen too low. That was my mistake. I underestimated the dollar's ability, the dollar and the Japanese yen's ability to continue lower. And sure enough, we've seen momentum to enter a number of respectable trades. For example, long euro. This isn't exactly a home run yet. It's only floating a 30 pip gain. Long sterling floating 82 pips, and the yen pairs are the real success story here again, just because the yen has been consistently falling and crowds have gone in the opposite direction. You're seeing that our system has done the opposite, obviously, and gone long sterling yen, euro yen, and other yen crosses. So that's something that I think will continue to work. Obviously, I wouldn't really advocate chasing in such quiet market conditions, and by chasing I mean, those trades are floating a couple hundred pips in gains in the euro yen, sterling yen, and that doesn't really help us now since we weren't necessarily positioned for it. But what I'm watching for is this. If it lines up, if we get a decent correction and the systems once again get long, I'm interested in taking that trade. I wouldn't necessarily be interested in getting short sterling yen or euro yen, for example, right now, because of the price action we're seeing in the dollar yen. And last week I posted this chart, which definitely remains relevant. Let me bring it in here. So this is a daily chart on the dollar yen. You see that the dollar yen broke significantly above and remains above this wedge formation dating back to the July high. If you want to draw the equivalent formation from the the multi-year high, we broke that about 2 weeks ago, a little less than 2 weeks ago. So the dollar yen seems in a good position to continue higher. In fact, it respected its 200-day SMA beautifully, and for all intents, it looks pretty bullish here. The only thing stopping me from getting long dollar yen is that I'm otherwise not so excited about being long the US dollar. And in fact, if I switch to the Dow Jones FXCM dollar index, you can see that the dollar index broke its downward sloping trend channel dating back to the multi-year highs back in July, which same time as the dollar yen highs. Dollar yen forms a big part of the index, and now has once again traded below its 200-day SMA, and is now testing the what has now become an internal trend line. Again, the downward sloping trend channel that was formerly resistance, now it's support, and it's respected it so far, but this doesn't scream bullish to me. If something breaks out of a trend channel, let's say a downtrend channel, it doesn't necessarily mean that we're in an uptrend now. It could just mean consolidation. So the dollar looks okay here. I mean, I'm not gonna bet the farm on getting short dollars here, but if I'm kind of bearish dollars and I'm quite bearish yen, the better trade opportunities are probably not going to be in the dollar or the yen pairs. They're going to be probably in the yen crosses. Sure enough, you flip to a daily chart on these yen crosses, and the sterling yen in particular has just surged above major highs and looks pretty bullish. Given market conditions, I wouldn't necessarily chase again, but it's something to watch. So even the Swiss franc is getting in on the action, which kind of tells you where we're at. So that's what I'm watching. Again, the focus comes back to our, the hot hand here, and I'll admit that I second guessed it last week because volatility expectation had fallen so sharply into last week. But I underestimated the fact that, or I underestimated the bearish implications for the yen and the greenback in particular. And again, if you're looking at the yen crosses, I think the system makes a lot of sense. I'm admittedly a little less excited about the trend trades on the dollar-based pairs. So my focus this week is definitely going to be the yen crosses. So I'm getting currency-specific questions, and I don't really mind answering these, but the scope of this webinar is definitely more about auto trading. Guest asked about dollar yen. Laid it out right there. Kiwi dollar looks fairly bullish here. The dollar looks to weaken. The New Zealand dollar tends to do well in low volatility conditions. Looks decent. So I apologize for the delay. If you came around at 10 a.m. Some technical difficulties this morning, but if there are no further questions, not much of a crowd today. I think I might close it up soon. Anthony says, Mr. Kerr says there's a hawkish BOJ think tank rumor around. What should we make of this? I don't really know what to make of that, to be honest with you. I guess it's as good a guess as any. Yours is as good a guess as mine. I don't, unless I have some sort of inside information or something like that, which is never the case. I'm not really going to take a strong stance ahead of big event risks. And, well, I wouldn't even classify the BOJ as big event risks this week. They're just really unlikely to do anything, either the bullish or bearish side. So I don't really put much credit to that, that BOJ think tank thought. Lori asked, do you see Swiss yen going to 110? I don't have a position in Swiss franc, Japanese yen. Is it going to 110? I mean, we're not very far from it, and we're trading above the highs, or we broke the highs. I wouldn't get short here, to be perfectly honest with you. And if I am short, close on it. I would probably close it on a daily close above, what was the high, 109.70. All right. Okay. So I'm getting an SI specific question. So Muslim asks, the euro dollar is retouching the broken trend line on the daily chart. However, the SI is still quite negative. What will convince you for the short side on euro, if at all? Not much. And actually, as it happens, I see exactly what you're talking about. What was formerly support now becomes resistance on this internal trend line. I think the euro looks decent here. I'm not buying because this isn't the market to chase price action. But if anything, I would buy a dip here. And again, the better plays for me look in the yen crosses. Roman asks, any comments about gold? Not much, Roman. Still pretty bearish gold because the SSI is so one-sided. So you can definitely check out the today's SSI update for more of that. Guest asks, what is a good way to manage time when trading when not in a trade? Do you look for more trades? I mean, yeah. I'm always on the lookout for good trades, but if already in a trade, I won't drive myself insane by checking open P&L or anything like that. I tend to hold on to positions for a little while, and in fact, the more I look at open positions, the more I tend to do stupid things. And that is a short version of why I like auto trading. Alright, so looks like I'm done with questions. I'm going to start wrapping up here. If you have anything else you'd like to ask about, feel free to contact me on Twitter. I'm going to send the email update on, if you missed any part of this, to my email distribution list. So sign up here. I thank you all very much for your time. Best of luck trading this week. And I'll talk to you again on Wednesday morning at 9 a.m. Take care.